there's a few strategies that I recommend when you're looking at renewing your mortgage, and I just want to touch base on a few of those. The number one thing that people do wrong is look at the contract at renewal, sign it without asking any questions, and then carry on with their life. Do not wait until your renewal date. Do not wait for the week that you're getting the contract from your bank, because your bank normally sends you a contract within a month of renewal. Whereas you should really be looking at your renewal strategy within the 6 months of when your mortgage is up. Start strategizing now. Start looking at what needs to be done. If you don't look at your debt, you don't look at your financial situation, you don't look at your credit, you just don't want to look at it because it stresses you out, even just thinking about it, it's a big stressor. You're wondering what's going to happen with you, what can you do? And I think mortgage and debt are the biggest stressors in people's life right now.
Helen, listen, most Canadians are thinking that when they get their renewal letter in their email, their only task to do is to sign it and move on with their lives. Is that correct?
If you want to be lazy, that is the way to go. If you want to lose money, that is also the way to go. As a mortgage broker, there's a few strategies that I recommend when you're looking at renewing your mortgage, and I just want to touch base on a few of those. So the number one thing that people do wrong is, like you said, look at the contract at renewal, sign it without asking any questions, and then carry on with their life. You could do that. Absolutely. But there's a high chance that you're getting offered the highest rate that the bank is offering. They're not discounting anything for you because they know you're an easy client, because you've probably done this before. You're also losing a ton of money because even if the interest rate is, 10 basis points higher than what somebody else can offer you over 5 years, you're losing at least $1,000. Depending on the size of your mortgage, you could be saving $1,000 to $5,000 a year over the 5-year term, which is a lot of money. It really depends on what you're getting. And again, the other thing that I would say that I've touched on in the previous episode is looking at the overall financial situation of the client, not just their mortgage. They could have other debt that they're paying really high interest rates on that they could consolidate into their mortgage and save money overall, right? Because if you're paying 10% to 7% on a line of credit, you could potentially add that debt into your mortgage and pay much less. And then the other thing that does is creates what we call cash flow. So you have 6 different payments going towards 6 different bills. But if you combine everything into a mortgage, you have one payment. It's at the same interest rate. Mortgages tend to be the lowest interest rate out of all the other loans, except for student loans. Student loans is probably the only one right now that is lower than anything else in Canada. And sometimes it depends on your repayment history. It's around 1 to 1.5% of whatever the loan is. But even with that, you can still combine the student loans. Normally, my strategy for my clients is anything that's higher interest rate than the mortgage, we consolidate into the mortgage if it makes sense to do so. If it's lower interest rate than the mortgage, I generally don't touch that debt. If somebody tells you to consolidate everything, you have to question why, because at the end of the day, you're borrowing money at an interest rate. If it's lower interest rate than your mortgage, why? So ask that person, ask your mortgage broker, ask your bank, why do they think that it's a good idea for you to combine your lower interest rate payments into a higher interest? Mm-hmm. Because for me, that does not make sense, right? There are certain scenarios where it does make sense. For example, somebody's really struggling and they literally just cannot make multiple payments. They can't function like that. And then they are better off just having the one payment. But financially speaking, it does not make sense. So when you're renewing, you have several strategies that I want to look at. First of all, you talk to your bank and you ask them what the interest rate is that they're offering you. Then you go to a mortgage broker and you ask the mortgage broker, what is the best rate that they can offer you on a renewal? And see if there's any other options for debt consolidating or if there's anything else that they can do for you, because a renewal might not be your best option. You could potentially want to refinance the mortgage and consolidate your debt into the mortgage at renewal. So what that does is if you just renew your mortgage with your bank, at whatever rate they're offering you, you get what you get because you're not asking the questions. By going and asking your bank directly what interest rate they can offer you and then going to a mortgage broker and comparing, you're the one with the leverage of knowing what else is out there. And I would tell the bank and I would tell the broker, hey, I'm working with my bank. Tell me what you can offer me. Here's what they're giving me. Can you get me a better rate? Same with the bank. Say, okay, thank you. I'm working with the mortgage broker. I'm going to see what they're offering. Usually what happens is the bank will try to compete with the mortgage broker and beat the rate. And the mortgage broker will take that rate that the bank is trying to beat and they will take it to their lender. And that lender will say, yes, we'll match it or we'll beat it. Now, the difference between working with a bank and a broker, again, is the quality of service. So you might get decent service at a bank. You might even get good service at the bank for your renewal. But again, there's high turnover. So I always say that, you're hardly ever working with the same person at every renewal. It's somebody different. And then you're calling to a call center at the bank and you're trying to get a hold of somebody at a call center and they're trying to look at your mortgage. They don't understand your financial situation. I have clients who text me. I had a client who texted me today at 3 a.m. and he's saying, I had a payment come out of my account. Can you tell me what this payment is for? I woke up at 5 a.m. At 5:30, I emailed him and I explained to him what that extra payment was because he was paying taxes and it was a year-end adjustment. So your bank is not going to do that for you. This person was so stressed out over their extra payment that he had come out of his account, which was a lot of money. It was close to $1,000. So he's stressing out. Is this an extra payment? Is this a mistake? He couldn't call the bank until 9 a.m. So he reached out to me. I sent him an email explaining what it potentially could be. Then we contacted the bank and we figured it out. Right. Mm-hmm. And so with the mortgage broker, you always have a representation for you. You always have a representative. I can't go into your personal bank account and I can't tell you what's in there because that's illegal. So I'm not going to go into your portal on your banking app and I'm not going to tell you what every transaction is. I don't have access to that. Once I complete your mortgage, that's it. I have access to help you, but I don't have access to your personal information after that. And you really don't want your broker to have that. Mm-hmm. You don't want anybody to have that mm-hmm. except for the financial institution where your funds are. So at the end of the day, when you're working with a broker, a good broker is going to be honest with you. They're going to tell you what your options are. And I will say, honestly, 1 in 5 people that I talk to becomes a client of mine. The other 4 might not be a good option for them. I could tell them you have this, and this option. I think they're better for you. And people appreciate that honesty more. And then they refer more clients to me. And again, it's the same thing. 1 in 5 people that I talk to actually become a client because I am honest with them. And I'll say, you don't really need anything else. You could just go renew with your bank at the lowest rate. I'll send you an email. Here's my lowest rate that I have. And then the bank will come back and they'll beat that rate. And I'll say, you're in a really good financial position. You don't need to do anything else. Just renew with your bank. And now they're competing with me. So they just gave you a discount. You just saved yourself, potentially between 1 and 5 grand over 5 years just by sending out email or making a phone call. And it's free to talk to me. It's free to talk to your bank. You're not wasting any money. You are taking your time to save yourself money and save yourself monthly payments over a term of a mortgage life. So that is a very important strategy that I tell everybody to do. The other thing is do not wait until your renewal date. Do not wait for the week that you're getting the contract from your bank because your bank normally sends you a contract within a month of renewal.
If you are finding this helpful, subscribe now to access our complete series of Canadian mortgages and master your home buying process.
Whereas you should really be looking at your renewal strategy within the 6 months of when your mortgage is up. So if you know your mortgage is up in 2026, look at when it's up. And if it's up within the next 6 months, start strategizing now. Start looking at what needs to be done. Are you only renewing your mortgage because you have no other debt? Or do you have other high interest debt that you could potentially consolidate into the mortgage and save yourself a lot of interest and save yourself money and then create cash flow that you could put into investments, savings? We say to our financial advisors who we work with, if you tell me that your client has a ton of debt and I can consolidate that debt into their mortgage at a lower interest rate and it gives them an extra $1,000 a month in cash flow, what can you do with that $1,000 a month? Can you reinvest that for them and create wealth for them? And they are so happy. Their financial advisors that I talk to, they say, "Oh my gosh, can you do that?" Absolutely, right? Like that's a lot of money. You don't understand how much money people spend on credit cards and car loans. I would say car loans and just regular credit card debt is the number one stress for people in their life, right? A mortgage payment, is a mortgage payment. It's going to be there until you pay it off. And most people will strategize for that as well. But you always have loans, you always have other debt that you're stressing over because it's higher and higher and higher interest, especially in the last couple of years. And if you don't actually talk to somebody, talk to a professional about what to do with that, you end up spending more money than you need to. You end up losing that money and you're paying interest for nothing.
So what I can understand here is that you have two options: renew with your current lender, or look for another option, an alternative, probably better, with another lender. Is that correct?
Yeah, absolutely. And not just another lender. If you go to a mortgage broker, we have access to over 30 different lenders. So the reason why I am obviously biased because I'm a mortgage broker, but I say go to a mortgage broker because it depends on where you are, depends on your situation, and depends on the discounts we get, because as mortgage brokers, we get monthly discounts from different lenders. December year end, there's always some kind of a promo or discount or cashback that your bank might not have, right? So that could be another thing that you can take advantage of, is if you go to a broker and say, hey, what can you offer me? I could say, oh, well, this bank is offering me cash back, so you can get all this cash back plus a better rate, or I can match the rate of your bank and still get you cash back. It's a much better option than just renewing.
And the process is exactly the same than in the beginning, because in the beginning we apply for a mortgage. Here, if you want to switch your mortgage, do you need to apply again?
It's slightly different. So if you're only doing a switch, if you're moving your one mortgage to another, with me, all I have to do is fill out an application and then submit the application to the lender with the best rate or the best product that works for you. And you don't really re-qualify, you just qualify at whatever the interest rate is. So it is an application that I submit, but it's slightly different to purchasing a house. So there's a little bit less hassle, a little bit less documents, but you're still going through the process of going from one place to another. So that is still an application. I still need your information. And normally for me to fill out an application, if you call me today, I could do that with you right now within half an hour and then get some documents from you. And that's all it takes. And I send that out to the lender to get the approval. With your bank, you sign one piece of paper. You don't really need to do anything else. So with your bank, it's a little bit simpler. But if you go somewhere else, you could save money. What's a half an hour out of your life to send me a few documents and take the time to fill out an application to save thousands of dollars over 5 years? And if you're looking to borrow more money, so if you, for example, were consolidating debt, that's no longer called a switch. It's actually called refinancing. So when you're adding more money to the mortgage, to the original loan amount, and you're not just switching, then that is considered refinancing. And that is a different application altogether. So then you do have to qualify to see if you are allowed to borrow more money and what your options are for interest rate at that point, right? And what is that going to look like financially? Can you afford to borrow extra, 100 grand to pay off your debt? If you're already carrying that 100 grand worth of debt, there's a high chance that you can, right? Because you're already carrying at a higher interest rate, but sometimes something happens and somebody has a job loss. Or something happens and one person is on disability or something, right? So then we're looking at a completely different situation. And then I have to say, yes, you can refinance, but it's going to be at a slightly higher interest rate. And so then the person has to sit there and decide what they want to do. But at least I presented them with the option of what can I do for them, what they can do. And again, sometimes I might say, you might want to consolidate your debt, because if you are on disability or if you lost your job and you have 100 grand worth of debt outside of your mortgage, you should probably talk to an insolvency trustee at this point, because you're just it's getting worse and worse and worse. And the problem is the debt collectors can come for
In
for
your
your
house.
house. Yeah, exactly.
The most important thing that I can see here is the importance of having a chat with a professional because, as you said, everyone has a different situation. So only if you share your data, if you are open to listen for opportunities for you, you will be able to get a better deal. Is that correct?
Yeah, you want to talk to a professional and get a gauge on your situation and see what they say. And if you don't like my opinion, go to another mortgage broker, get a third opinion. It's free. It's free to talk to a professional to get your life in order, your finances, and your financial health is weighing on your mental health, your family health, your professional health. You could tie a lot of stress, a lot of divorces to financial stress and financial health, right? If people are financially well off and they don't have a lot of debt and they're financially savvy, they have a lot less stress and they tend to be a lot more happy in life because they're not stressing about their finances. Whereas if you don't look at your debt, you don't look at your financial situation, you don't look at your credit, you just don't want to look at it because it stresses you out even just thinking about it. Because usually people stress out about that stuff because they do not understand the details of why they are where they are. A lot of the times people sign off on a credit card and say, I'll get a credit card, but they don't understand how a credit card works. What is it for? You're not just racking up the money to spend that money on something else. You have to understand what the actual purpose of a credit card is. And once you start to learn and understand that, you don't have to have a finance degree. You don't have to be financially savvy. You just have to listen and understand the very basic things. I was giving an example before of when I bought my first house, how I was stressed out and I was scared because I went to school for finance. So this tells you a lot. And I worked in hedge fund accounting as this was my job at the time. And I was buying a house and I was talking to the mortgage broker and she was telling me all these things and all these financial terms. And I wanted to cry because I didn't understand anything that they were telling me because they understood the lingo. They had the finance talk, right? They understood interest rates, bond yield. And I'm sitting there and I didn't even have a good understanding of how amortization worked. I knew what the word was because I understood because I went to finance school, but I'm sitting there and I'm thinking, how does the amortization work on my mortgage? And nobody explained that to me. Nobody explained to me any of the small details, and they didn't break it down enough for me because, again, finance talk is great and it works for people who want to sound smart. But if you cannot break stuff down to the most basic conversation to a child, if a child can understand what you're saying, then you really understand what you're talking about. I could sit here and I could talk about interest rates and bond yields, and 90% of the people are not going to understand what I'm saying. But if I break it down to something that's more useful for them, even if it makes me sound silly or sound like I'm using basic terms, I don't care, because then you can actually see and understand what is happening with your finances. And I think mortgage and debt are the biggest stressors in people's life right now, especially in 2025, 2026, with the high interest rates, with the uncertainty of economy, job loss in Canada. It's a big stressor. You're wondering what's going to happen with you. What can you do? And you really need to talk to a professional. You really need to sit down and figure that out now and not wait for last minute and start educating yourself. You don't have to watch 10 hours of podcasts, but you could sit and watch a 5-minute video about what an interest rate actually is. How does it work? You could sit down and you can talk to a mortgage broker and say, hey, I don't understand this. Most mortgage brokers will be very kind and they will say, okay, yeah, we could book half an hour to an hour and I can explain this to you, even if they're not a client of yours. That kindness and that understanding, that education, they will pay it forward and they will refer clients to you and they'll come back to you and they will remember you. And that's really how you want to be with clients, is memorable and helpful.
Excellent, Helen. Thank you so much for your knowledge and for sharing this information. I think it's very important not only for me, but for all the people who are listening this space. And what is the best place where they can find you?
You can look me up online at gondamortgages.com. You can call me at my business phone number, contact me through the video link, or you can also reach out to me at 902-237-1112 on my business phone.
Saving on your rate is just the first step. Now it's time to stop looking at your house as an expense and start seeing it as a wealth engine. In the next part, Helen breaks down how homeowners in Canada are sitting on 200 grand in equity and how you can finally put it to work. Let's dive in.